Hey guys, how are you doing today? Hope you are all enjoying your weekend and having tons of fun. Today we have some really big stuff to talk about, because I have reason to believe this iceberg research AMC shorting situation is much deeper than you think. We are also going to cover some recent events that took place and that I have been endlessly requested to do, particularly on Twitter. A lot of debate has been brewing in regards to cyber attacks and the consequences the markets would have to deal with given that one of them penetrates a financial sector. A great article came out by the New York Times that I will quickly examine and give my two thoughts. Many people are wondering if one of these attacks could offset a squeeze, and that is the angle by which I will approach the topic. Remember that tomorrow the market will be closed, but I will still be releasing a DD video on naked shorting and how it encourages disenfranchisement, so stay tuned for that. Nothing here is more than my own opinion based on my own research, and I am no financial advisor. Please consider dropping the like on the video if you find it useful, and without further delay, let's get started. Let's begin with a bang and address the big event that happened Friday. Iceberg Research made headlines and stirred up controversy on Twitter after it publicly announced that it had taken a short position, stating that after 1 month of trading sideways and a lot of money being lost in call options, believing the pump portion of the cycle of AMC is done. As such, this apparently had a huge sell-off according to the media. The notorious Motley Fool was quick to exact this as the main reason for why the stock fell, while we have seen Seeking Alpha make driving up FUD, using what they deem as an inadequate amount of evidence that justify AMC's market value being worth $27 billion. Close inspection into the news cycle always shows the same driven narrative, and that is that they want you to sell, but this time it's different. For 2 days I have been thinking long and quiet why a market research company would oust their positions, especially a short position, to the public in the fashion that they did, and I think I have finally come to understand the answer. You see, the issue lying in front of us is very similar to that which happens with the crypto scams that are ever growing, so let me explain. One of the best techniques used in big trading groups is that the top people in charge decide to buy a particular crypto before making a huge deal about it publicly on their chat rooms. By the time everyone is buying, these people are already selling, using trickery and schemes amongst each other on the top to transfer wealth from the people at the bottom. What Iceberg Research might be doing is of the similar technique, but performing it backwards. They are telling people they are grabbing a short position on AMC, but this might not be true. In fact, I have reason to believe it isn't so. What they are mostly likely doing is announcing this, and maybe to a degree they are grabbing put options or shorting the stock in some manner, but this would not be smart at all. Anyone that isn't bought by hedge funds will tell you shorting AMC is a losing gamble, even if they didn't account for the incoming short squeeze. The stock has a strong base of people unwilling to sell, making it improbable that the stock will fall outside of manipulative tactics. What these people are doing, which aligns perfectly in congruence with some of the hard research Columbia University has done, is that this is merely a method to drive news to portray a lie in order for them to get cheaper stock at the behest of newer uninformed traders. I know most people aren't paper-handed, but there is always a chunk of easily manipulate people who look at news and once they see the big media talking negatively, they quickly sell. Funny how this company was never heard about or really talked about, and all of a sudden it was making headlines on major financial news. Why is that? Who even cares about what Iceberg Research does? Well, they all do. The only incentive to disclose a short position, especially under these circumstances, makes absolutely no sense unless the benefit from it was to do exactly the opposite of what you were advertising yourself to be doing. This is a huge tactic that is employed routinely by Seeking Alpha website, as research suggests. A business model for them is to down-talk a stock, spreading a ton of FUD and suspicion about the stock's ability to make money. The company they target usually is not well known and small, but they do their research and know the company has strong financials with lucrative opportunities in the future. So, while they cause a sell-off by retailers, they are slowly buying into the stock as a discount, and when big catalyst arises, such as a merger or patent or strong financial earnings, these companies profit all the way to the bank, laughing at all the people that gave them their shares at a discount. Funny that all of the sudden, Iceberg Research is making headlines about its apparent public statement of a sell-off. Given that Motley Fool and now Seeking Alpha are making articles about this in particular, I have serious reason to suspect that they are simply aiming to reach those uninformed traders that tend to be very vulnerable and uncertain about their investments. Furthermore, looking at some of the fidelity data that came out, my conviction in this suspicion is strengthened. Look at the AMC numbers. There was slightly more than twice the amount of buying orders than sell-offs. To me, this aligns perfectly with this market research company alongside these other groups like Motley Fool and Seeking Alpha most likely buying the shares they got people to sell off. It's disgusting what they do, but effective, and incredibly profitable. The reality is that the media and these research companies aren't dumb like people make them out to be, they are most of the times ahead of you. They like being painted dumb and incompetent because it makes people discredit them and allow them to be more effective in their tactics without too much attention in what they are really doing, but that doesn't work on me. I work to know exactly what all these parasites do so I can inform the ape, the retail trader trying to survive in a world economy that only bets against them. Iceberg Research announcing they were shorting AMC wasn't a coincidence, but rather part of a plan to manifest itself into a stronger position on AMC itself. Chances are they have spreads in the stock but want to increase their long positions, and what better way than to cause a small but sizable number of people to sell off or simply not trade the stock in order to allow hedge funds to effectively drive the price down a little further through manipulation so they can scoop up some extra naked shares at a discount. It obviously worked, so do not expect this to be the last time they do this. Charles Schwab has disclosed it will have to pay $200 million in regulatory charges because of falsely advertising its robot advisor. Though investors aren't charged a direct fee for using their robot advisors, they are forced to pay a fee for the underlying ETFs that the robot advisor suggests and advises them to buy. These systems, these robot advisors, are implemented to push their own ETFs, and Charles Schwab makes a fortune through them. The problem in all of this is that the government isn't implementing reasonable punishments for these firms. If Charles Schwab made billions of dollars in fees accrued through the advertising at the behest of this robot advisor, then this $200 million fine isn't really a fine, but rather a cost of business. Why wouldn't others follow suit if they know they can make billions and pay a couple millions whenever they get caught? Everything happening with GameStop and AMC is precisely because of the inaction of the SEC and the lack of real consequences for Wall Street. I may not like hedge funds or banks, but make no mistake, the burden of all that has happened lies at fault with our incredibly inefficient government. They permit and incentivize robbery and fraud every single time that they slap a fine smaller than the profit made for a crime, because it sets the standard for all other companies in the sector to take note and do the same. Lastly, let's talk about hacking. A great article came out from the New York Times talking about the possibility that a cyber attack could disrupt financial systems. I bring this up because a week or two ago, we saw the DTCC implement some amendments and rulings precisely with the intent of forcing its members to upgrade their security systems. The article is very interesting, and I recommend people to read it. Essentially, the article references some experts who say that the attacks that we have seen are not sophisticated or coordinated to a large degree that it could disrupt or infiltrate the ever-complex financial system. Most cyber attacks focus on banks, with the intention of stealing credit cards or bank information. However, more sophisticated attacks aren't impossible. The New York Cyber Task Force, made up of government and private industry experts, have been running tests to see how they would theoretically put up with a larger attack, say that of a nation with the intent of infiltrating a third-party service like a cloud computing company, and installing worms and malware in order to slip in a bigger financial institution and start wiping out data. They say that they have countermeasures that would fight off a formidable attack such as this, such as harboring an initiative where participating banks or other institutions have their data encrypted and backed up daily into an offline secure storage. The article then mentions trading, where they say that to the extent that trades continue to occur and were not settled due to a breach, investors would get extremely nervous very rapidly. I mention this because I have seen a growing amount of people in my comments asking if a cyber attack could stop the squeeze, and my definitive answer to that is a resounding no. Given the worst luck where the mother of all squeezes just happens during a cyber attack, there are many countermeasures placed to stop that attack. Trades would happen because if not, these brokers and banks would be liable to pay for what you attempted to sell, and they are not going to run the risk of going out of business because they didn't allow their investors to sell. This is a liability issue that everyone is taking super serious, so do not concern yourself over a cyber attack affecting your tendies. Instead, focus on how to keep on adding at the cheap and preparing yourself for when the time does come. Tomorrow's video will have the technical portion so as to what to expect this week in terms of trading. We will have another batch of DD to add some extra wrinkles for you guys and cover some stats more closely that show hedge funds have not covered yet. Stay tuned and stay bullish for that, and drop a like on this video, and please, for the love of tendies, place a comment down below. Let me know if you liked the video, and tell me where do you see AMC or GameStop 10 years from now. As such, I leave you guys to enjoy the rest of the day, and I will see you tomorrow for another brief video. I love you to the moon. Thank you all for being amazing, and a big shout out to all my Patreons and one-time donations who make these videos possible. You guys are the best of the best. And with that, I leave you to the rest of your day. See you tomorrow.